So let's get started with the live show. This is the stockpickprofits.com live market update. We do this every day after the market. It is January 8th, 2019. Things are looking a lot different in the markets. Before we get started, let's go ahead and do the disclaimer so everybody's on the same page here. All right, let's put that up there. Read the disclaimer, all right, gang? Past performance is no indicator of future performance. Nothing in this show is an offer to buy or sell any security. We are not registered investment advisors. Nothing in this show should be taken again as an offer to buy any security. Always consult a professional before making any investment decisions. And the rest is in the fine print. So go ahead and read it. Savate, you're here, brother. How are you, man? It was a great day today. So let's kind of get started. Let's cut right through the chase. It's Tuesday. We all want to get some rest. It's been a long 2-3 days, especially for the Alabama football team. But let's go ahead and talk about the numbers here. So the Dow just rip-roared higher, 256 points. That caps a 3-day rally. Same thing with the S&P. We're up about 25 points, almost 1%. They're just missed. And the NASDAQ almost got back over 6,900, just missed by a couple ticks there, up about 74 points. The Russell 2K keeps rocking along, man, up another 1.25% today. 19 points, almost 20 points. The IWM's been on a good run lately. I don't know if any of you guys played it, but we didn't get into that. And so let's go ahead and get the show started, gang. It started out kind of bleak this morning, right? We had Samsung come out and do the same thing that Apple did last week and lowered guidance, talked all this bad news. I'll tell you guys a little story. When the rest of the trade team got in this morning at about 3 a.m., first thing out of one of them's mouth was, oh, no, Samsung just lowered guidance too. And I turned around and I said, that's what we want to see. And they said, why? What do you mean that's what we're going to see? We're long on Apple. I said, well, that's perfect because all you guys look at it like nobody's going to sell a cell phone again in their lives. But I look at it like Samsung just confirmed that the problem isn't Apple. The problem is iPhones. The growth is slowed. Let's look at Apple and let's look at what Tim Cook said about Apple today, right? The infrastructure is strong. The planning is strong. Everything is strong. They have a myriad of products and services. They have billions of dollars of cash in the bank. They have a great stock. They have a great company. And we're gonna sell because Samsung, and the market took it like that, right? Apple had a nice $3-4 gain today. Where did Apple finish today? Apple finished right above 150, so it's back over that 150 level. For you guys with those long options we've been talking about, right? We're talking before about if you wanted to get long on Apple, we bought a set. So that thing's down a little bit. It's down about 30%, but it doesn't expire till January of 2020. So we're not going to worry about it. That's a nice long bet, right? Now, for you guys that out there that weren't paying attention, that might still want to get into that, you might want to go long Apple for the year. And you're looking for a way to do it, and you don't have enough to buy $150 a share, right? What do? Well, let us give you some free help. What you do is you go out about a year on the options, like those 290s that we're talking about. You can buy those 290s right now at about 24 cents. They're just the January 2020 expiration. Give yourself some time for some volatility. Give yourself some time for some runs. Give yourself some time for some earnings, right? Which we'll talk about in a second, because in all this market madness the last 4 or 5 weeks, guess what? Guess what starts on Monday? Earnings season. Oh my goodness, it's mile a minute. No wonder I'm running out of voice. So look, as far as that Samsung news is, just like I said, you always want to be able to look at things a little bit deeper and a little bit more, just get more to the truth than most people do. And at face value, very rarely is that. And just like what happened with our trade team this morning, when they first walked in, they told me, Pat, oh no, what do we do about Apple? Samsung just lowered guidance. And I turned around and I told them, you buy more, because this just told you it's not an Apple problem. It's a phone problem. It's a phone sales problem. Apple is much more than a phone sale company, right? So why the hell wouldn't you dive in? Well, if you did, you picked up a nice $2-3 a share today. So that's a nice play there. We're still long on Apple. You know what I mean? We did some things today. How was your guys' day? We cashed in. Let me show you. We cashed in Monster today, and we did it, and we got a couple bucks on that trade, right? All you viewers. We cashed in Monster 120% in 5 days. We actually had a couple of new members that bought after we bought when the stock was kind of fiddling around at 49 and we were waiting for it to break out. They bought a little bit after us, and we actually had a member get 230% on this, or 208%. I forget what it was. Maybe Greg. Yeah, Greg might remember. But look, we're going through so much green right now, we can't even remember. So look, if you're not getting that kind of action, you know what the link is, you know what to do. Go ahead and get some. But look, this is probably one of the biggest buying opportunities we're going to see in a long, long time. I mean, I don't think any of us really thought we were going to get this, not with the economy going the way it was, and not with things going so strong and stuff. You know what I mean? Rate hikes were setting in real nice. QE was unwinding real nice. Then we had this trade thing come in, right? And it kind of kicked in a recessionary reflex to the Chinese economy, and that kind of strangled them a little bit. And now we're at the table, we're negotiating and stuff. Look, a year ago, nobody really saw this coming, right? And it's just presented the best buying opportunity. There you go, Greg. Was it 208%? Yeah. Yeah, that was Jeffrey too, our newest member, man. Jeffrey, good job. Go get some. And you see, that's how it works. Look, we sat back, right? We told you from December forward, we sat back and we just let things do what they did. We didn't lose any money. We didn't make any money, but we didn't lose any money. But sometimes the best trade is just being able to say, I didn't lose, right? And that's what these last 4 weeks were. We needed to see it shake out. We needed to see things develop. Yeah, there you go. Now, Greg put this link in the comments. So that's a live link if you guys want to click it and stuff. Okay. I'm not going to do a whole lot of marketing in the show. If you guys want the service, it's there. Okay. We've got customers and we've got a trade team that's really excited right now. And they're always excited, actually. But look, if you want it, it's there. If you don't, that's fine too. Okay. So look, Sears got a little breath of life this morning, right? And when we went to sleep last night, they were about to shutter it. Well, if Eddie Lampert can get up another 1.5 million, I think it was, right? The bankruptcy judge said that he'll push the plan through. So look, you know, it's been a great 3-day run, right? I think I was watching CNBC a little bit earlier, and I believe there's Ross. Hey, Ross, you got 120% on Monster. Ross is one of our new clients. I think Ross has only been with Stock Pick Profits for what, about a couple weeks, right, Ross? You know what I mean? And Ross, you got to admit, right? It doesn't hurt. It's better to sit on your hands and not lose a thing. And then when you get your opportunity, you pop in and get 120% on Monster. And then we just go from there, right? Good job, Ross. All you guys, great work by our members. I think Savati is here. I saw him a little bit earlier. He was saying he got it. Roland just popped in. Roland, did you hit that trade? But you guys can post it while I'm talking about the news in the market, okay? Let's get this show rolling. So, you know, there were some interesting articles out there today. Of course, there was a CEO of Apple, Tim Cook, right? He was out there talking about, he's very optimistic about the trade talks with the U.S. and China. He's already also very proud of the ecosystem of Apple, and he says it's never been stronger, and we agree. And that's why we went long Apple in this, and we went long at about 150, right? 151. And then we sat there through it going down to 143, 142. We knew it would end soon. Look, so, you know, there's a lot of talk. There's a lot of back and forth where the trades are going forward. And that's nice. You know, it seems like the media, especially CNBC, has kind of got off. It's 2 months. Beautiful. And then, hey, there's Savati. Welcome to the party, Savati. I miss you, man, without the live room. So look, it's really a nice time in the market because we're starting to get What we're starting to get there is we're starting to get a little semblance, and we're starting to get a little order, excuse me. But we want to be cautious. Jeremy Siegel from Wharton University was out, a big economist, smart guy, genius level guy. He was out there, and he actually had the best spew that I've heard all day from all these analysts and stuff. And he said, you have to say that Christmas Eve was the bottom. It was the capitulation, and we're seeing that from the market. We're up about 10% from that spot, right? Already. I mean, what are we talking? 10 days? So it looks like we were right on that bottom, and we called it on the show the day after, right? Kona, Jesus Christ, look what the cat dragged in. But we called it the day after. We said that looks like capitulation, and we're playing it like it is. And Jeremy agrees. Now we agree with Jeremy that the market is not out of the woods yet. But you have to admit, most of you guys have never been through this kind of a market in your trading life or your trading careers, or maybe in your whole life. But it was an interesting market. But you guys learned some great new terms, right? Like, how many of you before this knew that what a bull market really was? How many of you knew what a bear market really was? That was the key. Right? What is a bear market? Well, it's 20% off the high, right? What is a correction? 10% off the high. A lot of you guys learned this over the last 5-6 weeks. Our members are way smarter. We've just been doing lessons after lessons after lessons after lessons, live lessons. Why? When we spend 3 or 4 weeks sitting on our hands letting the market digest, what do? Do we just step back and do nothing? No, we get smarter. That way, when the action starts like it did today, and we want to get 120% on a trade, like Ross did, we're ready, right? We're ready to play. We're ready to trade. You know what I mean? I always say that, right? What happens on game day is a product of what happened on practice day. So we took advantage of that, and we got some good learning and stuff. But back to Jeremy Siegel. So what he's saying is, look, I want to teach you guys one more new term. You guys keep hearing this word recession. What is a recession? What really constitutes a technical recession? Well, a technical recession simply is when you get 2 months of GDP shrinkage in a row. It's that simple, right? A bear market is 20% off the high. A correction is 10% off the high, and a recession is just 2 months in a row of GDP recession. Now, look, he's got the best point of them all. He says, look how far we've come so quickly. It was really, the market was talked into that sell-off. And so it really was a great buying opportunity, and he feels that way too. If we do start getting a recession or anything, especially with that blowout jobs number and stuff, the economy is just way too strong right now to even consider that. And if they get this trade stuff all sorted out, we're just going to the moon, guaranteed. But there's always chances for problems, and he's like we are. We think there's one more good leg on this bull, and we're going to play it like that. But at some point late in the next year, maybe the middle to the late of next year, we're going to want to start positioning for either a sideways market for a while, or maybe a little bearish action for a little bit more of an extended period, maybe like 6, 7, 8 months. But he's like us. He thinks it'll happen maybe at the end of 2019, and I agree with him. We got to see how this stuff digests. Again, we keep telling you guys, stop trading based on the news you just read. You got to think forward. You're buying forward. You're thinking forward. And so why are you trading on yesterday's news, right? Load up gold soon. There's our gold bug. Actually, we're staying away from gold, and I'll tell you why in a second. But let's take a look at the chart. I want to take a look at this chart together with all you guys. So look, this is a continuation of the chart. We've been talking about that one S&P 500 chart, right? We've been looking at a year chart. And if you check this out, look at it. Look at that right side. That's the recovery. Look at that bottom, man. We have set a nice bottom there. Now, retests are common, and that's why, look, today, we could have rolled those monster a little bit more and maybe got a little bit more out of it. But Why take the chance in this market? We know it's retests are common in these bottom buildings. So yeah, we've got a great 3-day rally, but we don't want to get ahead of ourselves, and we don't want to get opportunistic, and we don't want to get silly. We still want to play it the way we've been playing it up until now, because it's working very well. If it does continue up tomorrow in the next few days, guess what? We're still long Home Depot, Walmart, Apple, and Twitter and Snap. And so we'll just cash those in. But we don't want to put any new money on the table. Let's let it cycle a little bit. We'll let you guys know if we open any new trades. But that trade we were talking about, what was it, Thursday or Friday that we opened up? We just cashed it in today for an easy 120%. And again, if you're not getting those results, there's a link. I mean, I don't know what else I can say to people. If you're so concerned about people being frauds and stuff, then you shouldn't even be on Facebook. Speaking of Facebook, there's another hit piece on it. I'm trying to find it here on CNBC. But evidently, Facebook's getting a little beat up right now, but the stock is actually doing very well, right? Let me pull up Facebook here. Oh, excuse me. I had to get adjusted. We're going to look at a stock. Yeah, you see, Facebook was up another $5 today. Got back over that 142 level, which is nice. But it's still cratering there, and it's not really coming off that bottom like a lot of stocks. We think, if you guys are looking for trades, because you guys are always asking us about trades and stuff, what we think is maybe with Facebook, you might want to set up something short on Facebook going long, though. The same way we talked about setting up those 290s on Apple, go all the way out, go all the way to next January. Don't be shy with your dates. If you're playing a play long, play it long. But look, if you can't short Facebook at 143, just like you couldn't buy Apple at 143, then guess what? Go to the options. You can get those 290s, and for 25 cents, you can control 100 shares of Apple. I mean, that's nice. That's leverage, man. That's how you do it. You might not know how to do that, and if you don't, click the link and sign up for the service, and we'll teach you. But the same thing with Facebook. Maybe if you think, the market's going to remain strong. Facebook's strong right now because the market's strong. And it's a FANG stock, and it's a darling stock, and it's been beat up a little bit. But there's some underpinnings that might down the line really come back to bite Facebook on the butt. We don't have a lot of faith in Facebook as a stock going forward. If you're going to buy a Facebook at 143, stop. Just go buy the Apple for about $10 more a share. Jesus Christ. Why would you buy Facebook when you can buy Apple for the same price? That's one of the biggest things about this correction that we just had. And about this big sell down is there's a lot of great stocks that are cheap. 3 months ago, we couldn't get Facebook or Apple stock anywhere near the price of Facebook. It was the most valuable company in the world 4 or 5 months ago. Right now you can, right? How many people have you seen say over the last year, man, if I could get Apple cheaper, I'd buy it, right? Well, it's cheaper. Are you buying it? We are. We're loading it up. Now, you know what, Jeff? I wasn't really going to get into gold today, but I'm going to talk to you about it just a little bit because I want to talk about gold right now because we're actually looking to set up a trade on gold and we're looking to set it up short. And I'm going to tell you why. If you guys have been watching gold, you see it pushed up to that $1,300 level a couple days ago, right? What day was that? Let me see here. Yeah, on 1/2, it got up to about 1296. No, on the 3rd, it got up to 1296, almost 1300. You see the way it's recoiling from 1300? Look at what affects gold: the dollar, the yen, interest rates, right? Economic growth. Those are all things that affect gold. What has been happening in the last 2-3 months? Everything that's positive for gold, right? Slowing down rate hikes, right? Economic slowdowns, right? The value of the dollar shrinking, right? The yen getting the crap kicked out of it, right? Okay, so everything for the last 2-3 months has said gold. Well, how come we couldn't get over 1300? Seriously, 1300 is the breakout. I think everybody in this broadcast will agree. If you look at 1300, if it can break 1300, it will. Well, guess why it's doing that? Because Trades being resolved. The dollar's getting its mojo back. The yen is going where it belongs. And China and the US are getting a trade deal. The only thing it's still got in its favor is that they might not raise as much interest rates as much as they were. But guess what? There's already 2.25% that's been built into that interest rate that gold has to compete with. So be careful, Jeff. That's all I'm saying is be careful. Always be convicted, have conviction with your trades. And I'll say this straight to you, Jeff. Always have conviction in your trades. So if you believe it, you play it, okay? Because we're not always right over here. And we always admit that. We always say we're not always right, but we are looking to set up a short play on gold. So I'm glad you mentioned it, Jeff, because at least we can give our opinion. And if you do play it, Jeff, as always, you post it over here, man. You know us. We love that stuff. Now, look, there's some great buys out there in the market right now. Remember the last week of 2018, we did that 5 for 2019. And then we kind of talked about a couple other plays and stuff. Tomorrow's show, it's Wednesday. It's hump day. So let's get over the hump tomorrow by reviewing those picks, because some of those picks, right, Jeff? Maybe AJ is here or he's not here. I don't think AJ's here. I don't know. But Kona and stuff, Kona knows. Jeff, Kona, all the regulars, right? You guys, Greg from the office knows, because a couple of them were his ideas. We're gonna go over those tomorrow, because look, whether you can do our service or not, we want this show to help you. Okay, so we're gonna go over a few picks tomorrow that if you want to add to your portfolio for 2019, they look like good picks, and we'll give you our opinion on them. What we think's hot. The market's on fire right now. What's going to come tomorrow, who knows? Especially the way the last 7 weeks have gone. But we always play the charts, and it looks like we're in a nice bullish run, right? So basically, that's what we did today. We unloaded that monster because 4 or 5 days, 122%. We're not messing with that. We're taking the cash. We take that cash, we put it in the portfolio. It's now dry powder, right? And we start going looking for some new dynamite. Let's go look for some new things to blow up, all right? And we're going to do that the morning. You're the best, Jeff. The viewers are the best. Sorry about Bama, man. They got Bama'd. I turned it off about the end of the third quarter. I couldn't watch it anymore, man. I'm so sorry. All you Tua people out there, I was right with you, man. I was ready to shed tears. It hurt so bad. But one thing we got to admit, that quarterback from Clemson, that guy's a freshman. Oh, my God. He's 6'5". He's got a gun of an arm. He just tore up one of the best teams ever in college football. God bless that boy from Clemson, man. If anybody deserved the national championship yesterday, it was that kid from Clemson. And that running back, Etienne, huh? Isn't he a beast? You took Clemson, you dirty dog. How dare you? Get off the show, Jeff. But hey, we've had enough fun for the day, okay? Let's call it a Tuesday. There's not a whole lot happening but NBA tonight, okay? So we're not going to get too much into that. But it was a great game, all in all. Congratulations to the Clemson Tigers. That's 2 national championships in, 3 years. A beautiful, beautiful experience for all your players, I'm sure. That quarterback is dynamite. If you guys are into sports, go take a look at him. But we're about stocks. So look, we like the way the market's sizing up, but we want to remain a little cautious still, because you know how things are. We could get a retest. Even Jeremy Siegel said he thinks we'll get a retest, and we agree with it. We talk about retests all the time. But the more the market shapes up, the less destructive that retest will be. A retest doesn't have to come all the way down to the previous bottom, okay? A retest can go in a lot of different things, and that's Fibonacci and stuff like that. We'll get into that some other time. All right, gang? So look, we're going to call it a day, okay? Jeff, all of you guys, I'm just playing around with you guys on the Bama, man. You know, it was a great game. It was a lot of fun. It was great to see those kids having so much fun. It was great for humanity, right? Look, 9 p.m. Eastern time today. All you guys, I've told you guys before, watch the speech. Don't read the news reports. Watch the speech and make your own decision. Pull it up on YouTube or something without a cryon, something without their built-in fact checkers or whatever the hell they're doing, and just watch the speech, listen to his words. If you believe him, then you go with that. If you don't believe him, you go with that. But don't let some journalists tell you what you believe, okay? We've got an opportunity to hear firsthand from the President of the United States what's going on that border, what's going on with this shutdown, what's going on with a lot of things. Let's give him the respect that he deserves as the president of the most powerful country on this planet, and let him speak, and then we'll digest it from there, okay, gang? So no, none of the pro-Trump, none of the anti-Trump stuff. We're going to listen to the president of the United States. Again, we are traders. We don't give a rat's, you know what? We want to know what the scoop is. So, you know what I mean? Oh, I told you, my father-in-law won't give it back to me. You tell the wife. Seriously. Jeff, you tell the wife. My father-in-law took the hat. I've told you guys the day after I finally picked it up from the office. My father-in-law, who's an immigrant from the Philippines, great man, very dedicated American. Guess what? Greg, are you shutting down the show, Greg? But look, my father-in-law took that hat and he will not take it off, man. He loves the guy, man. He loves the guy. All right. So look, we'll take that word from Greg. Have a great start to 2019. Look, we are still long on Walmart. We are still long on Home Depot. We are still long on Walmart. We are still long on Snap, and we're still long on Twitter. We cashed in Monster for the 120% because look, don't look a gift horse in the mouth. Just take your win right now. So yeah, I got that one. But you guys stick with the program. Again, let me show you that chart one more time. Look at that, how that's coming together on the end there. Look at that dramatic sell down, how fast and how evil it was. And look at how we're bouncing back. And you see, even in that recovery, about halfway up, you see it's got a little pullback, right? It's got a little pullback on it. So always, anytime you're trading, you trade it the way we are. Oh, bam. Good job, Kona. Good job. You know what I mean? That's great work. I'm looking at that. Yeah, Apple, IWM, and NVIDIA. NVIDIA just in time, too. I think something happened at the stock, and it's going down right now. Something happened with NVIDIA today. But yeah, good job, Kona. Thank you. Thank you for sharing that. Kona, of course, is a local trader. We love Kona. But you guys stay cautious. Like I said on that chart, you guys, if you can, blow that chart up, because you see how about halfway up that recovery, right? Halfway up that recovery, guess what happened? We had a little freaking pullback. So that's the way you want to trade. Stay ahead of the trade. We bought that monster. We got ahead. We took profits. What if it's been a 3-day rally? We probably get a little softness tomorrow or the next day. Who knows? And Friday's coming around the corner. Look, here's the other thing too, gang. Don't forget that Monday starts earnings season. Now, all the pain that was caused by these analysts over the last 4 weeks lowering guidance, guess what? Starting Monday, the bar is lower, right? All right. So let's close it on that, okay, gang? Everybody at the office, thank you for joining us, man. Greg and all you guys. You guys drag Samuel out here one day, okay? I know he's busy, but you guys drag Samuel out here, okay, Greg? Kona, Jeff, all you guys. I guess AJ didn't have time today. Big Joe, you guys, thank you for watching the show. We'll be back tomorrow, okay? And like I said, we're going to review some stock ideas. So you guys that are looking for ideas, that's the time to get them, all right? Let's have a great afternoon. Thank you so much. We'll see you tomorrow after the market.